The second point I want to make is that we're trying to protect our portfolio's value. We are trying to protect our capital. That's what we can do very effectively if you follow, certain principles that I'll just talk about in a second. But what we're seeing is pressure on funding. So it's harder for companies to get money. Brookfield wrote off billions of dollars on their Healthscope acquisition because they got too much debt on board. We're seeing in our own portfolio, the dividend yield sort of has halved in the past 12 months. Why is that? Because the companies that we're investing in, they're going for growth with that capital instead of paying out dividends. So what do? Well, you make sure you do your balance sheet analysis. That's what we do. We look at the balance sheet and the cash flow very closely. A lot of the market, like, the brokers and fund managers, they're obsessed with meeting earnings expectations. Well, that is important, but in the long term, your capital is protected by the balance sheet and cash flow, which is where we focus on.